our favorite president of the AICPA, Barry Melancon, gave an interview to the Financial Times in which he warned against lowering standards. That's the headline of the interview.
Well, the headline was "The Most Important Man in Accounting Warns Against Lowering Standards." Make sure you have the full headline.
That's right. Barry Melancon, the longest-serving CEO of the AICPA, is retiring. I think he did retire, right? It was supposed to be at the end of the year, so he's done.
December 31st. Yep.
So he's out, and he gave this interview to the Financial Times, and he said that the 150-hour rule has been pivotal in elevating the profession from a trade to a respected field, and he warns that lowering standards may harm the profession's reputation and public trust. And I just can't believe, actually I can believe it because he's been doing it for decades. So he's in complete denial that Barry Melancon thinks that he has raised the profile of the profession over the last 30 years or more that he's been running the AICPA. Like this, it's just like you look at the numbers and it's not better than it was when he started. It's worse. Like salaries have stagnated for decades. We have fewer accountants and auditors than ever before, and they aren't making any more money. And they're working long hours for low pay. How can he claim to have elevated what's that?
The Big Four has gotten bigger than ever, though, under his tutelage.
Right.
And
the big firms have
become richer,
more and more profitable. The only thing that has improved that I can tell in Barry Melancon's time as the president of the AICPA is big firm profits and the compensation of the senior equity partners and managing partners who make millions of dollars a year, including Barry Melancon, who made something like over $2 million a year as the president of the AICPA. So I mean, how can he be so clueless?
A lot of his article, it feels like doublespeak. He talks about if you remove the 150-hour rule, right? You make a change to that. We're going to have a lowest common denominator problem. E.g., an unskilled practitioner could bring the profession into disrepute. Disrepute is basically the state of being held in low esteem by the public, right? That these people without the extra 30 hours are going to hurt the profession. But he also argues that the number of entry-level positions will be reduced because of technology, and the pyramid shape of accounting firms won't exist in the future, and that folks need to be trained to move up to the middle of this non-pyramid shape, whatever this new shape's going to be. It's not a pyramid.
It's like a diamond shape that he shows.
A diamond or an octagon, right? And you got to move people to that thing. But when I see the words or hear the words, so folks need to be trained to move to the middle of this new non-pyramid shape, that means you're going to train them, right? Like an intern, or it's like a trade or a profession. So it's a full circle back to what he tried to eliminate, which is accounting being a trade or profession. People being guided and tooled up the ladder.
And like the idea that a fifth year of education is what is doing that is just crazy. The irony is that he says we elevated accounting from a trade to a profession. And meanwhile, there are many trades that make more money than accountants do now.
I talk to accountants all the time who their plumbing clients make way more money. Yes.
Yeah.
180 grand a year for a plumber is no problem.